All right, welcome back, everyone, for another deep dive.
Yes, welcome back.
And for all those Stock Explorers folks out there, today we're, zeroing in on Oklo,
Oklo, yeah.
that advanced nuclear technology company. I think we've touched on them before. And, the reason we're looking at them today is they just dropped their full year 2024 earnings report.
Yes, they did.
So that's what we're going to be kind of dissecting today. We're going to, kind of pull out what we think are the most important parts of it and really try to figure out what this all means for investors, folks like yourselves out there who are thinking about Oklo, thinking about the future of the company. We want to do this, keep it clear, keep it grounded, try to offer some, real perspective here.
Absolutely. We want to get into the details and understand what's happening.
Yeah, exactly. So, just as a quick reminder, Oklo, as of right now, March 24th, 2025, they are still pre-revenue, right?
That's right.
They're not making any money from sales yet. They're really focused on that development, that regulatory approval kind of slog for their Aurora Powerhouse.
The Aurora Powerhouse, yeah.
And, some of their other advanced nuclear technologies they're working on. So this deep dive into their financials, their strategy, hopefully it's going to, paint a clearer picture of where they stand today and what their potential looks like going forward.
Exactly.
So let's jump right into that 2024 full year earnings report, shall we? Not surprisingly for a company in this stage, there's no revenue to report, right?
Yeah, makes sense.
Makes sense. But, the net loss did widen to 74 cents a share for 2024. And just for comparison's sake, that's up from 47 cents a share in 2023. So what's your first reaction when you see that increase in net loss?
Well, the widening net loss is primarily driven by their strategic decision to invest more heavily in their core activities. That includes research and development for their reactor technology.
Right.
And also navigating that complex regulatory landscape in the nuclear energy sector. And, this kind of level of spending is pretty common for companies that are still in the pre-commercialization phase, especially in such a heavily regulated industry.
Yeah. Yeah, no, that makes sense. I guess for investors out there, though, seeing that loss widen, it always raises a little bit of a flag, right?
It does. It does.
So, let's look at it. Let's break it down a little bit further into those quarterly numbers. So Q4 2024, earnings per share, -9 cents. Some reports I saw even said -7 cents.
Yeah, I saw that too.
And either way, both those numbers, they fell short of what analysts were kind of expecting, right? And, looking ahead to the current quarter ending here in March 2025, that forecast is showing, kind of a similar negative EPS right around that 9-cent mark. So it seems like, for the near term, these losses are going to stick around.
Yeah.
What do investors, how do they interpret that consistent, negative EPS?
Well, I think the consistent negative EPS really underscores the fact that Oklo is still in that investment and development phase.
Yeah.
It's a reminder that, they're not generating revenue yet.
Yeah.
And, for investors, the key thing to look at is to see if these investments are actually leading to some progress.
Yeah.
In their key areas.
Right. Right.
Are they making headway in regulatory approvals and the technology development? Those are the things that matter.
Yeah, they got to be making moves forward, right?
Absolutely.
So it wasn't all doom and gloom in this earnings report, right? We did see some positive things pop up, even alongside those losses. And one of those that really kind of, I think, caught a lot of people's eyes was the increase in the Aurora reactor's scalable capacity. They're now saying it can go up to 75 megawatts.
Yeah, that's a big jump from the original 50 megawatt.
Yeah, huge.
Oh.
So how do you see that increase? What kind of impact could that have down the road?
Well, that 50% increase in capacity it's more than just, a neat fact. This directly impacts their revenue potential.
Oh.
Each reactor unit, once it's up and running and selling power, it has the capacity to generate significantly more revenue. So, assuming they can get those power purchase agreements in place,
right,
this increase makes their long-term financial projections look a lot better.
Yeah. More juice per squeeze, right? More megawatts per reactor. So that's a good thing. We also saw some other, strategic moves. They announced a deal with Switch, another one with Our Power, and they acquired a company called Atomic Alchemy. So it seems like they're branching out a little bit. It's not just power generation. How do you see these moves fitting into their overall strategy?
Well, I think these moves show that they're diversifying their growth strategy.
Okay.
The agreement with Switch in particular, that's That's a big one. It's a master power agreement. It shows that there's real market validation for their technology.
Yeah, yeah.
But then you've got the Atomic Alchemy acquisition.
Yeah.
That suggests they're getting into the radioisotope market,
Interesting.
which is really interesting. That opens up new revenue streams, and it highlights that their nuclear technology can do more than just generate electricity.
Yeah. Yeah, it's kind of a multi-pronged approach.
Yeah, exactly.
So let's dig a little deeper into the nitty-gritty, the financial details. Full year 2024 operating loss, $52.8 million. But the cash they actually used in operations was $38.4 million,
Okay.
which was better than their own projection, right? They were expecting it to be between $40 and $50 million.
Interesting.
So what does that tell us about how they're managing things on the financial side?
Well, the operating loss, that's the overall cost of their business.
Mhm.
But the fact that they spent less cash than they thought they would, that suggests they're being careful, that they're managing their spending efficiently. And, for investors, that can be a good sign. It
Yeah.
shows they're not just, throwing money around.
Right, right.
They're being mindful of their resources.
Especially in this pre-revenue phase, got to make that cash last, right?
Exactly.
And speaking of cash, one of the more reassuring things, I think, for investors is they ended the year with a pretty healthy cash reserve.
Yeah, they did.
$275.3 million in cash equivalents and marketable securities. That's a nice cushion, right?
Oh, absolutely. That gives them the flexibility to keep funding their research, their development, and all those regulatory approvals. It gives them time to actually execute their strategy.
Yeah, it's like runway.
Right. It's breathing room.
Breathing room, yeah, exactly. So we've talked about the financials. One of the other big things that popped up in this kind of news cycle around Oklo was some changes in their leadership. They brought on Daniel Poneman and Michael Thompson to their board of directors. Those are two pretty big names.
They are, yeah.
Poneman was the Deputy Secretary of Energy. He was also the CEO of Centrus Energy Corp.
Right.
And Thompson's the CEO of Reinvent Capital. So, I mean, these are guys with a lot of experience. What do you see as the importance of bringing these two guys onto the board?
Well, the expertise they bring it's very strategic. Poneman, with his deep knowledge of the nuclear industry.
Yeah.
He understands the regulations. He knows how to work with the government.
Yeah.
That's invaluable for Oklo.
Sure.
And then Thompson, his background's in technology financing and investment. That's going to be crucial for them attracting more capital and managing their resources effectively.
So they're kind of covering, I guess, two very important bases there,
Yeah,
right?
exactly. It's a good combination.
Deep industry knowledge, the regulatory side, and then also, the financial savvy.
Right. They're setting themselves up for success.
Yeah, and that can only boost confidence for investors, I would think, right?
Yeah, I would agree.
So let's, we've talked about financials, we've talked about the leadership. Now, the big question for investors is, okay, how do they get out of this pre-revenue phase and actually start making money?
Yeah, that's the million-dollar question.
Right, right. And their main goal, as we understand it, is to get that Aurora Powerhouse commercially operational by the end of 2027.
That's their target, yeah.
So until then, as we've discussed, losses are probably going to continue. They're going to have to rely on that cash that they have. And whatever future funding they can get their hands on.
Yeah, so.
And, how are they thinking about that? How are they going to secure that funding? That's going to be a lot of money they're going to need to get to that commercialization phase.
Well, they're looking at a multi-pronged approach,
Right.
They're going to be pursuing federal funding. They're exploring project finance options.
Right.
And they're also looking at tax equity incentives. All those incentives for clean energy projects, they're trying to diversify their funding sources so they're not relying on just one thing.
Yeah. Yeah. Don't put all your eggs in one basket, as they say. One of the things I think that's really crucial for any nuclear technology company is navigating that whole regulatory landscape, especially with the NRC.
NRC, yeah.
And Oklo seems to be, putting a lot of effort into that, which makes sense. They're currently involved in what's called a pre-application readiness assessment.
Okay.
With the NRC for, basically their combined license application for the Aurora Powerhouse at the Idaho National Laboratory.
I see.
So for folks who maybe aren't super familiar with that whole process, can you kind of unpack that? What is a readiness assessment and why is it so important for Oklo?
Sure. So the readiness assessment is kind of like a practice run.
Okay.
before they submit the real application.
See?
It lets Oklo share their plans with the NRC and get feedback early on. The focus is on the site, where they want to build the
All
powerhouse
right.
and all the environmental stuff. The big benefit here is that the NRC can point out any potential issues or missing information early in the game,
Yeah, yeah.
so it can actually help streamline the whole process down the road.
So it's almost like I don't know, getting your homework checked before you turn it in.
That's a good analogy.
Right. You want to make sure you're on the right track. You don't want to get to the final and have it all wrong.
Exactly. You want to avoid surprises.
Right, right. Especially since Oklo has had, some history with the NRC, right?
Yeah,
Like,
yeah.
like that COLA denial back in 2022. So it seems like they're trying to learn from that and make sure this time around it's a smoother process.
Yeah, they're definitely taking it seriously. And, they've been engaging with the NRC since 2016.
Wow.
So it's been a long-term commitment.
Wow.
They've already achieved some important milestones, like getting their quality assurance program approved, which is a big deal.
Okay.
And they're going for the combined license application, the GOA, under Part 52 of the NRC regulations.
Okay. And is that what's significant about Part 52?
Well, Part 52 kind of combines everything:
Okay.
the design review, construction, and operation licenses. It's all in one process, which is supposed to be more efficient.
So it's kind of like it's streamlined. It's
Yeah, less back and forth.
less back and forth. Okay.
And there's also the 2024 Advance Act, which is supposed to modernize nuclear regulations,
Uh-huh.
and it could even reduce licensing fees. So there's some potential benefits there for them.
Okay. Okay. So, they're aiming to have the Aurora Powerhouse up and running at INL by 2027,
That's right.
which is, that's ambitious, right?
It is, especially with all the regulatory hurdles.
Especially with, all the complexities of the nuclear industry. But if they pull it off, that'd be a big deal.
Oh, yeah. It would be a major milestone, potentially the first commercial advanced reactor in the U.S.
Wow.
And they've actually already hit some key licensing milestones.
Mm.
They got the site use permit back in 2019. They got the fuel material award that same year.
All right.
They submitted their first custom COA in 2020. And last November, they achieved environmental compliance for site characterization.
Huh. Okay. So they're checking those boxes.
They are, but that 2022 COA denial,
Yeah.
it's a reminder that it's not a guaranteed slam dunk.
Right. Right.
It's a tough process. So I think that's why this readiness assessment is so important.
Makes sense.
They're trying to avoid those pitfalls.
Yeah. Yeah. De-risk it as much as possible.
Exactly.
Let's talk about some of the collaborations Oklo has going on. Their partnership with the Idaho National Laboratory, INL, that seems pretty crucial to their whole plan.
Oh, yeah. INL is a key partner.
Okay.
So they're providing the location for the first Aurora Powerhouse. They're the source of the HAEU fuel, which has been recovered from that experimental breeder reactor 2.
Right.
And Oklo is also putting their Aurora fuel fabrication facility right there at INL.
Okay.
And that's important for their whole fuel recycling thing.
Yeah. Yeah. Tell me about that fuel recycling. That sounds like a pretty big advantage.
It is. It's a big part of their sustainability plan. By recycling the fuel, they can reduce the amount of nuclear waste they have to deal with.
Okay.
Plus, it gives them a more secure fuel supply.
Yeah.
They're not as reliant on mining new uranium.
Okay.
INL is also helping out with research and development.
Right.
Fuel modeling, prototype fabrication.
Yeah. Yeah.
And they have this interface agreement in place to make sure everything's done by the book, environmentally speaking.
Okay, good.
Yeah.
So they're really leaning on INL for a lot of this. And then, we also have to talk about the Department of Energy.
The DOE, yeah.
Another big partner there, right?
Oh, yeah, the DOE is a major player. They gave Oklo the site use permit for INL.
Yeah.
They're providing that initial HALU fuel.
Right.
And they even approved the conceptual design for Oklo's fuel fabrication facility.
Okay, so they're really on board with this. Oklo is also in the DOE's voucher program, right?
Yeah, that's for advanced materials testing.
Okay.
And the DOE and INL, they've already done all the environmental compliance assessments for the site.
Okay.
And they finalized a memorandum of agreement with the DOE. So, yeah, it's a very strong partnership.
Solid. So Beyond those partnerships, what are some of the core technological advantages that Oklo's Aurora design has to offer? I mean, we've been talking about clean energy, reliable energy, affordable energy. We talked about that increased scalable capacity.
Yeah, yeah.
What are some of the other things that really stand out about this technology?
Well, it's really the combination of all these innovative features.
Okay.
They've got the small modular reactor design,
Mm-hmm.
which makes it really flexible. You can deploy it in all kinds of
Yeah.
places. Especially good for energy-intensive users like data centers
Right, right.
and their commitment to fuel recycling.
Yeah. Right.
That's a big plus for sustainability. And the Aurora reactor itself,
No.
it can run on fresh HLU fuel and recycled fuel. That's pretty cutting edge.
Okay, so that's a big deal. And we got to talk about the environmental benefits,
Oh,
right?
yeah, those are significant.
Zero carbon emissions during operation, 147 baseload power, long refueling cycles, like 10 years plus.
Yeah, it's a very different picture compared to, your traditional fossil fuel power plants.
Yeah, yeah, completely different. So how does this modular design work? We talked about the capacity ranging from 15 to 75 megawatts. How does that all come together?
So they're using heat pipe technology
Mm-hmm.
and supercritical carbon dioxide for power conversion, which allows for passive safety features. That means the reactor can shut down safely without any active intervention.
Oh, wow.
And the installation time is potentially really short, under 18 months.
Oh, wow. That's amazing.
Yeah. And environmentally speaking, it's a win-win. No carbon emissions, less mining because of the fuel recycling,
Mm-hmm.
and just less nuclear waste overall.
Yeah, yeah. So it's clean, it's efficient, and it seems like the market is recognizing these advantages, right?
Seems like it.
They've got this order pipeline of over 14 gigawatts,
Wow.
which is a lot, right?
That's huge.
That includes that master power agreement with Switch for up to 12 gigawatts. So that's some serious commercial interest.
It is. There's clearly a demand for what they're offering.
Yeah, and their business model, focusing on selling power as a service. I think that's pretty smart.
It is. It makes it easier for customers to access clean energy.
Yeah, yeah, just plug and play, basically, right?
This is the idea.
We touched on this earlier, but it's worth mentioning again. Bringing on Poneman and Thompson, those two new board members, those are some strategic hires, right?
They are. You've got Poneman with his nuclear expertise
Yeah.
and Thompson with his financial background. That's a powerful combination.
Yeah, and they're joining an already experienced leadership team, right?
Oh, yeah. The existing team has a lot of knowledge in reactor development, fuel recycling, and running a company like this.
Right, right. This is a good mix, it seems like. Let's talk about investor confidence for a moment.
Okay.
As we've seen, Oklo's stock price has been a little bit volatile,
It has, yeah.
which, I guess it's understandable. They're pre-revenue. The nuclear industry is, it takes a long time to develop things. It's complex.
It's a long game.
It's a long game, right? So, we saw the stock price jump after they released the earnings report.
Uh-huh.
But then it dipped back down a bit in after-hours trading.
Right.
So it's like, it's sensitive to every little piece of news.
It is. And you have to remember, the whole clean energy sector is hot right now.
Right.
Investors are really paying attention to it.
Yeah. Yeah. Nuclear is kind of having a moment, it seems like.
It is.
Yeah.
It's being seen as a key part of the solution to climate change.
Right. Right. So what do you see as the main things that are going to drive that stock price volatility, going forward?
Well, any news about regulatory progress will be big.
Uh-huh.
Any financial updates, of course.
Yeah.
New partnerships, agreements,
Right.
and just the overall market sentiment.
Right.
How are people feeling about growth stocks? How are they feeling about the energy sector?
Right. Right. So it's a lot of different things.
It is. There are a lot of moving parts.
Yeah. Yeah. So, for investors looking at this, it seems like there's a big potential upside, right?
Yeah, definitely. Clean energy is a huge market.
Right.
And it's only going to grow.
Right. Right.
But there are also risks. They're not making money yet. The regulations are complex. There's competition. They need to secure that HLEU fuel. It's not a sure thing.
Yeah. Yeah. It's not for the faint of heart, right?
Exactly.
And we've seen a lot of different price targets from analysts.
Well, yeah.
Some are really high. Some are, a bit more cautious.
Yeah. It's a wide range. It just shows how much uncertainty there is.
Yeah. Yeah. It's tough to predict.
It is. But I think what's interesting is their focus on these small, modular, fast reactors
Mm-hmm.
and their fuel recycling technology.
Okay.
that sets them apart.
Right,
It
right.
could be a leader in this space.
Yeah, yeah. And their strategy seems pretty sound, right?
Yeah, I think so.
Selling power as a service, using that modular design to scale things up, focusing on fuel recycling, and going after those energy-hungry customers like data
Right,
centers.
they're trying to hit all the right notes.
Yeah, yeah, absolutely. So let's wrap up by talking about some of the challenges they're facing and, what their future outlook looks like. The fact that they're pre-revenue, that's a big challenge.
It is.
And they're probably going to keep losing money until they get to that commercial operation phase in 2027.
Yeah, that's the reality.
So how are they gonna bridge that gap?
Well, a lot depends on that first Aurora Powerhouse at INL,
Uh-huh.
getting it up and running, getting all those NRC approvals,
Right.
making progress on the site development, and signing those power purchase agreements.
Yeah.
They've
Yeah.
got a lot of interest, but they need to turn those letters of intent into actual contracts.
Yeah, yeah, dotted line, got to get those signatures.
Yeah, exactly. Yeah.
And, relying on government grants and partnerships, that's helpful,
It is.
but it also means they're not totally in control.
Right, it's true. Government priorities can change.
Yeah, yeah.
And partnerships can evolve.
Right.
So there's always that risk.
Right, right. But they are working with those national laboratories,
They are.
which gives them access to a lot of expertise and resources.
Yeah, that's a big plus.
Yeah, so that should help. So the next big hurdle, it seems like, is scaling up the technology.
Yeah, that's the next challenge.
They've got to standardize the design, figure out the manufacturing, the supply chain, get those partnerships in place for deployment.
It's a lot to handle, but if they can do it,
Yeah.
the potential is huge.
Yeah. Yeah. And, they're in the right space at the right time, it seems like, with all this interest in clean energy.
They are. Investors are looking for solutions.
Right.
And Oklo is offering a pretty compelling one.
Yeah. Yeah, absolutely. So let's summarize all this for our listeners who are, maybe thinking about investing in Oklo.
Okay.
What are the key takeaways here?
Well, they're pre-revenue. They're losing money,
Mm-hmm.
but they have a strong cash position
Uh-huh.
and a clear plan to reach commercial operation by the end of 2027.
Right, right.
So it's all about execution now.
Yeah, and watching those regulatory milestones
Absolutely.
and making sure that Aurora reactor technology is the real deal.
Yeah, that's key.
But they've got this growing order pipeline.
They do.
They've got these strong partnerships.
They're strong partnerships.
It seems like there's a lot of interest.
There is. But, investors need to be aware of the risks.
Yeah.
Pre-revenue companies, especially in the nuclear sector, they're not a guaranteed win.
Right, right. Do your due diligence, folks.
Exactly.
So, if you're interested in Oklo, keep an eye on their progress.
Yeah, follow those regulatory approvals.
Watch for those operational milestones.
That's where the story's going to unfold.
Yeah, yeah, absolutely. So, something to think about as we leave this deep dive, how could this advanced nuclear technology, like what Oklo is developing, how could it change the way we think about energy in the future?
That's a good question.
And what role could it play in investment portfolios that are focused on that long-term growth, on those clean energy solutions?
Yeah, something to ponder.
Something to ponder. So thanks for joining us for this deep dive into Oklo. We hope this is giving you a better understanding of their earnings report, where they stand, and what their future may look like.
We appreciate you tuning in.
And to all our listeners out there, especially the StockExplorers folks, thanks for being here. Before you go, make sure to subscribe to the deep dive. Hit that like button if you found this helpful, and turn on those notifications so you don't miss our next deep dive. We'll see you then.